Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies and Atlas Lithium, which has recently exploded in their overall share price. In this video, we will be analyzing four main articles, to where the first one is titled, Sofi Technologies Triple Beat Led to a Sell-Off, an Opportunity if you believe the thesis. So we'll be discussing their future projections, the thesis of this company, whether or not I am doubling down on this company by buying more, and what the future share price could be over the next few years. The next article we will be analyzing about Sofi Technologies is how an analyst believes that Sofi truly is the future of banking, to where they are bringing next generation technology to the fingertips of their overall consumers. And they're growing so rapidly that the share price truly needs to catch back up because the recent sell-off was completely unfounded. Next up, we have a Sofi catalyst, to where Sofi Technologies has partnered with an investor and entrepreneur to help women get their money right. So that is going to be a huge catalyst for Sofi Technologies, even in the midst of this downtrend. And then lastly, we'll talk about Atlas Lithium's future regarding what professionals are saying about this company and why they have recently surged well over 250%. So for more videos just like this one, don't forget to go and annihilate that like button right now because it helps me out a ton. Comment down below your future share price targets for Sofi Technologies. Don't forget to become a member of this channel to support me personally for as little as 99 cents, so you won't even feel it, which allows me to make more videos just like this for you by hitting that join button right next to the subscribe button, and subscribe if you are new so I know to report on Sofi Technologies even more. So with that being said, let's dive into today's stories. Sofi Technologies, if you didn't already know, is a fintech company that essentially operates as a digital bank. They had an amazing Q1 2023 earnings results to where they delivered a triple beat. And what does this mean? Essentially, they beat on their overall revenue guidance, their earnings per share guidance, as well as their overall yearly guidance by bringing in numbers above what were estimated, and they adjusted their full year guidance, meaning that they are forecasted to bring in even more impressive revenue and earnings per share numbers for the full year of 2023, while also becoming profitable toward the end of the year. Now, despite this amazing earnings report, which I talked about in a previous video, so I won't go into those details, even after that phenomenal earnings report and triple beat, the share price has started to decline and trend downward, which we predicted in a previous video. However, now that the shares are trading at less than $5, what should investors do? Well, honestly, it depends. If you are already exposed more than a 5% initial portfolio allocation to this company, then buying more of this company may not be the best course of action for you, because then you would be taking on unnecessary risk of losses, which would be poor risk management. However, if you own less than a 5% initial portfolio allocation to this company, then you should take this time to dollar cost average your cost basis for this company, so once it inevitably rebounds, hopefully, you will be making money hand over fist as long as you are not already overexposed. Right now, let's consider the good signs of this company pertaining to their top of the line beat as well as their annual projections. Clearly, sometimes the market does not act logically, which is exactly what we are seeing right now, where Sofi shares have dropped more than 20%, to where many experts believe they could retouch their 52-week lows. However, the author's conviction, as well as myself, believe that Sofi is still a great long-term buying opportunity, and our convictions remain the same, to where our overall thesis have not changed. This company is easily worth $7, meaning that you still have plenty of upside potential to make money during the year of 2023, as long as your average cost basis is low enough. Now, I'm basing my decision off of the information which we've generated from previous earnings report and future catalysts that are coming up, and that's how I arrive at my price target of $7 per share. Now, right now, I personally only have a 4% allocation to this company because I like to practice proper risk management and not over allocate myself any more than a 5% initial portfolio allocation to any singular risky growth company. However, if they break below $4.50, I will add my last percentage point, bringing my total allocation to this company up to 5%, so I can lower my overall average cost basis, because once this company bounces back either at the end of the year or throughout the year of 2024, I'll be making a lot of money and a lot of profits from this particular company. But I also own a lot of other companies such as Palantir, Tesla, and some of my favorite ETFs, which I literally tell everyone about, which would be VTI, SCHD, and QQQM. A lot of my money, over 50% of my portfolio, consists of those investments. However, let's get back to Sofi Technologies. Technologies. During the middle of the conference call, the CEO of SoFi Technologies disclosed how their technology platform named Technisys recently signed a new client in Mexico, which is a very good news, because the synergy between SoFi Technologies' Technisys platform and their Galileo platform not only saves SoFi money, but it also enables them to generate more revenue. For instance, together, Technisys and Galileo act as a banking-as-a-service platform, which represents a $7 trillion market opportunity, to where as soon as 2027, we could see that this market could be worth as high as $183 billion. So SoFi is literally just getting started. I also want to bring to your attention that this technology segment for SoFi Technologies is still in its infancy, meaning that there is a huge growth runway ahead of SoFi Technologies in their technology segment. Right now, their lending segment brings in the majority of their revenues, but their technology segment could bring them in hundreds of millions of dollars in the future. So stay tuned for that as they continuously scale. Many investors right now have sold off SoFi Technologies due to the ambiguity in the overall banking space, ever since we've seen Signature Bank, First Republic Bank, and of course Silicon Valley Bank, which really made investors aware of the whole banking fiasco. People are concerned for the health of SoFi Technologies and SoFi Technologies' overall deposits. However, as deposits leave these other banks that I previously mentioned, this money will have to be deposited somewhere. Many are flocking to major large banks who are too big to fail. However, out of the 25 banks that I'm analyzing and that the author points out on the list above, 23 of them have reported Q1 earnings, where SoFi's metrics showed that they are the 5th largest in overall deposit growth by dollar amount, which means that depositors are flocking to SoFi Technologies for their FDIC insurance safety, which goes up to $2 million, their high APYs on their checking and savings account, as well as their overall stability and resiliency. So although SoFi clearly is not as large as these other commercial banks, SoFi Technologies still really takes care of their customers while also appealing to young high earners who have FICO scores above 747, which is very impressive. These young high earners are making well over 6 figures or $100,000 per year, and SoFi Technologies has very safe underwriting policies, so they're really not trying to take on any type of lending which is too risky for them as an institution. On top of that, as inflation increases and interest rates are increasing to get inflation under control, people are trying to take out more personal loans. And the main reason for this is because people want to take out personal loans to pay on their high interest credit card debt. So that's why SoFi's lending business has seen a huge increase in both personal loans as well as some student loan originations, which have recently outpaced the overall decline in their home loan originations. Home loan originations are clearly safer than personal loans and student loans. However, it's good to see we are seeing some of this volatility offset in their other lending segments. The difference for SoFi Technologies, however, is that their book is rather small, which means if a lot of their personal loans or student loans end up going to default and they go into delinquency, this will be problematic for SoFi Technologies, but due to their very good underwriting policies and how their average member has a great credit score and earns a lot of money, I don't think SoFi is at risk of having any type of their loan segments go into default. And I also want to mention how over 95% of SoFi's deposits are actually secured, which is very good, making this again a very stable, resilient, and safe company, which is why so many investors and former customers of these other banks that have gone underwater have flocked to SoFi Technologies. As the author correctly states, he says that he does not see any evidence of outflows or elevated levels of delinquencies occurring in SoFi Technologies. However, what he has seen is the opposite, where we have seen a great inflow and influx of members in SoFi Technologies, so I don't want to sell off of speculation or engage in what-if debates like the author is saying. I want to go off of the hard numbers, which we've talked about in previous videos. But the best part about SoFi Technologies is that the future of this company is so bright. This is a company for long-term investors. If you are a short-term investor, this may not be the company for you. For instance, their forward earnings estimates for the year of 2032 projects that they will bring in $7.86 billion worth of revenue, while their earnings per share will reach $2.29, which is extremely impressive. These are amazing results. However, 2032 to some investors seems far away. So what about the end of 2022? 2023. Well, at the end of 2023, as you know, in quarter 4, they are anticipated to post GAAP profitability, which is again absolutely amazing. Therefore, they're going to come out of 2023 very profitable, to where 2024 could cause the share price to absolutely explode and then enter that phenomenal growth trajectory all the way until 2032. So you literally have years of upside ahead of you if you decide to invest into the stock, at least over the next 12 months. This is why analysts, professionals, and various experts in this space are saying that truly SoFi is the next generation of banking. In a recent interview on Yahoo Finance, an analyst said that the big question, really what's happening right now, is between the student loan repayment moratorium, where federal student loans are frozen right now and not accruing interest, which de-incentivizes people to refinance their student loans with companies like SoFi Technologies. And also, SoFi has actually sued the United States government over student loans, and if they win, this is going to be huge for SoFi Technologies, and I'll tell you why in just a moment. But apart from the student loan moratorium, there's also the student loan forgiveness plan, to where the Biden administration is trying to forgive student loan debt, which again is going to hurt certain institutions like SoFi Technologies, even though I think the student loan moratorium hurts SoFi Technologies even more than student loan forgiveness, but that's a whole nother video. This has negatively impacted SoFi Technologies so much that their student loan origination volume grew to just over 525 million, which is down 50% from their pre-pandemic volume before the student loan moratorium actually was enacted. Student loans make up for around 15% of loans that SoFi is currently signing and putting out. And therefore, this student loan moratorium is radically hampering and preventing SoFi Technologies from scaling, which is making a headwind for them. But listen to what the analyst has to say about this. If the student loan moratorium were to end, the company could literally break even in the next quarter if the student loan moratorium ends. So if the lawsuit and the student loan moratorium end, or if the Biden administration's student loan forgiveness plan does not go through, these are going to act as extremely positive catalysts for SoFi Technologies. And honestly, not a lot of people are talking about this right now. And these decisions should be reached by the end of June. So these catalysts are on their way, and they're very close. Lastly, let's talk about another SoFi catalyst, where they have recently launched a partnership which will explore how women can create financial goals and set themselves up for bright financial futures in collaboration with SoFi Technologies. According to SoFi's research, they say that nearly 2/3 of women report that personal finances impact their mental health. So SoFi wants to step in and not only ease the minds of various women who are struggling financially, but also help them. SoFi doesn't just want you to save money and get discounts and bank with them. They also want to teach you how to grow your money and grow your finances over the long term. Financial literacy is so important, and that's why I like SoFi so much. They not only give fantastic rates, discounts, and help people grow their money, but they teach people how to be fiscally responsible, and they give them resources to educate themselves and even have complimentary access to financial planners, which is very good. So I really like how SoFi Technologies really takes into consideration the health and wellness and even the mental health of their overall consumers, and this is a very positive catalyst that most likely will slip under the radar after their earnings and the overall share price falling, even though I don't think the share price will fall much further, and I do think we are set for a rebound, especially if we reach the next earnings report. So over the next few months, prepare for a rebound once the share price finds a bottom. Lastly, let's talk about a company which recently surged by hundreds of percentage points, and that would be Atlas Lithium. Atlas Lithium clearly is a lithium company, and many people are gravitating toward lithium companies because of electric vehicles. Electric vehicle companies are very reliant on lithium producers and manufacturers and miners because they are needed in electric vehicle batteries. This company has recently exploded lately, and many professionals believe that now they are fairly priced. Experts are very bullish, to where 8 of them who are covering this current company are actually all bullish, where none of them say to sell or hold this company. They all say to buy this company. Over the last 3 months, analysts have 12-month price targets that range anywhere from $12 on the low end to $70 on the high end, with the average price target coming in at $39, which is what the current share price is gravitating around. And although I do think there are other lithium companies that are better than Atlas Lithium, feel free to look further into lithium companies, especially if you already own electric vehicle stocks like Tesla, NIO, Fisker, Rivian, Lucid, and many others. So with that being said, I would love to hear your thoughts about SoFi Technologies and Atlas Lithium. Don't forget to become a member of this channel by pressing that join button right next to the subscribe button to support me personally, so I can make videos just like this for you. Smash the like button if you haven't already, subscribe if you are new, and I will see you in the next YT video.